Welcome back. A first of its kind in the Middle East and Africa region, R&M opened a new patch cord assembly facility this morning in Dubai Airport Free Zone, catering to the growing demand of data center cabling requirements. A family-owned Swiss-based company and leading producer of high-quality copper and fibre optic solutions, currently operating in 30 countries internationally. Company representatives stated that in addition to serving R&M customers across the Middle East and Africa, the assembly will also supply patch cords to countries in the Asia-Pacific region, including India, China, Japan, Singapore and Australia. According to Peter Reichel, owner and executive board member of R&M, by having the facility set up in the UAE, the company will generate a more customer-orientated service and increase the overall speed and efficiency of the end result.
We have actually since about 15-20 years business here in Middle East, and I'm an owner, an entrepreneur, and as I always, just to sell is one thing, but on the other side also to produce, to look for the customer and make them happy every day. I mean, it needs more than just a sale.
In fact, for us, we have multiplied our number of staff by 4. We have increased our sales. At the end of second quarter, we already achieved our last year turnover. So for us, it's very successful. It goes on the right direction. I think it's also because people want to consume more and more data, so they are looking more and more for good infrastructure. And our job is to build like a road, you know. So it's nice to have a nice car. It's nice to have a nice computer, but you need also to have a nice highway to drive fast. So you need to have also a good cabling, a good infrastructure to make sure that the investment that you are going to do will stay for 10, 15, 20 years.
Luxury car makers are cashing in on Middle East investments into showrooms and facilities. According to a local paper, high-end motor makers have enjoyed their best sales performance yet in the first half of the year. Experts say that investing into facilities plays a big part in boosting sales for the luxury car market. For the region, Audi dealerships are currently spending nearly 1 billion dirhams and reported selling 15% more of their car models, up from the same period last year, delivering just over 4,000 vehicles. Some outlets are expecting to see sales rise by up to 80% off the back of new facilities and new car models. Experts say that the overall market in the Middle East is growing at a rate of 4%, with the luxury end at 6%.
People who come in to buy high-value items, they want a unique buying experience. The showrooms, the service that they receive, everything must be top class and unique, because at the end of the day, they are putting out a large amount of money, and the feel-good factor is extremely important for them. Therefore, we have set ourselves into building state-of-the-art showrooms with the latest technology to make the buying experience comfortable and unique. Now things have started looking up slowly, and people have now come back and want to invest in big-ticket items to feel good, to enjoy themselves. And luxury cars also represent a great value for money because they hold their resale value. And when it's eventual time to sell off the car, they feel that they will get a much better value for the car in the future.
Let's now look at the stock indices across the GCC. Markets were rocked this week and risk appetite hit hard as a combination of several key central bank actions and disappointing data from the US put the spotlight back on the global growth story. Additionally, surprise cuts by the People's Bank of China and the European Central Bank kept risk sentiments lower. To find out more, we earlier spoke with Gaurav Kashyap, the head of the DGCX trading desk at Al Pari, Middle East.
Well, the financial markets were rocked in trading last week as risk sentiment remained squarely on the back foot after a combination of coordinated central bank rate decisions as well as an ailing U.S. non-farm payroll number really kept risk moods damp in trading last week. And all of a sudden now we see currency, commodity and equity markets all reaching levels that they were before the European summit when we saw that big move of risk sentiment take markets higher. Well, the main surprise on last week was we had the People's Bank of China reducing their one-year benchmark lending rate to 6%. They also reduced their deposit rate to 3.00%. This is the second such surprise cut by the People's Bank of China following their cuts in June. And actually the timing of this cut is quite suspicious. We have a very, very stacked economic calendar this week from China. We have the trade balance data coming out tomorrow. We had inflationary data from China, which was slightly lower today, this morning. And overall, we have the GDP reading from China, which is expected to weaken to 7.7%. So I think the sign from the People's Bank of China is that, look, we are sending a sign out to the global economy that the growth in the second largest economy continues to be weighed down due to sluggish demand from the rest of the globe. So overall, because of this, we expect risk sentiments to remain on the back foot. We favor US dollar strength in this week of trading. We expect the euro to remain weaker against the US dollar, and we expect commodities to also be weighed down against the US dollar.